All right. Well, good morning, everyone. Thank you for joining today's agent development training. I'm back from my week of spring break. I know Steve Cavajola ran point last week, and I know he crushed it as he always does. After I get through a couple of announcements, we may pivot back and just see if there's any questions for the content that Steve covered last week. More focused on the term and the term with living benefits and some of those types of maybe a little more simple types of solutions. I want to talk a little bit today about final expense, which would be more permanent life insurance, and then some of the hybrid products that we have in our portfolio that I at least want to expose you to. I don't know if we can do an in-depth training in an hour on those products because there are some complexities to them, but I want to at least let you know that they're available so that when it comes up in conversation, you kind of understand at least the basics of it. A lot of times those products take some time to go back and understand and develop and maybe work with our carrier partners to even build the appropriate illustrations for them. I will say overall, I just came off the TVP call and we collectively got some tremendous kudos for our supplemental and our life insurance sales year over year. We're 15 weeks into the new contest, or I'm sorry, the new calendar year, and our territory's sales on subs and life are up about 58% over what we did during the first 15 weeks of last year. So, congratulations to all of you. Thank you for your contributions on that. I do know that several of you on the call have been key in that and instrumental in that. I know Kevin McIntyre has led the charge and especially selling supplements in the over 65 market. I feel like we finally cracked the code on that at some level and have seen some tremendous success. And so a lot of people are riding Kevin's coattails and beginning to understand that. I think more people are cross selling in the under 65 space, leveraging our guaranteed issue, critical guard, hospital wise, accident wise, and vision and dental products. So that's exciting. And then life insurance has been something that a lot of you have really stepped up on. I see Kevin Tran on the call, a brand new agent. I think he had 11 or 12,000 FYCRs in his first week or two in the business, solely on life insurance. And so we'll definitely tap into some of his expertise, and he can probably train all of us on life insurance as we move forward as well. So I just want to congratulate you because those are some pretty astounding numbers. The rest of the country is kind of flat on those numbers, and we're up 58% year over year. So congratulations and kudos to all of you on that. And hopefully today's call will kind of help perpetuate more life insurance sales because I think it's something we're only beginning to scratch the surface on. Before I jump into some announcements, I do want to just talk about next week. I'm going to be going over compensation and reports next week. It is a fun ADT session for me to do. We try to do it once or twice a year. I would encourage all of you to tune in. A very early mentor in my career told me that when you're in commission sales, there's two rules you have to abide by. Number one is understand or know your compensation, and number two is work your compensation. And so I'm going to try to give you some insight into the tools and resources and reports that you should be monitoring at least weekly within the Health Markets platform on the Resource Center. That's one thing Health Markets has always done an incredible job of is giving us access to data and access to numbers so that we can see where we stand as compared to our previous best and also compared to our peers. So hopefully I'll do a good job next week of going through that in some detail with you. Couple of announcements that I wanted to make. One is all of you, if you haven't already gotten it, you will be getting an email about your they call it your One Health ID, OHID. I had announced this in our Indiana sales team, but there's a process you have to go through. I got my link this morning, and you have to click on the link and go through it's 15-second process, but it's just integrating this One Health ID across all of our platforms. And so it just has to do with how we're going to be logging in. Because we are a wholly owned subsidiary of United Health Group, they are constantly working to improve the technology and the security around our technology. And so this is just a step in that direction. If you're already have One Health ID, it's a really simple process. And I think most of you do because most of you are contracted to sell United Health One or United Health Care, Medicare products or GRIC. It's that same type of login that we're going to begin using to get into all of our internal health markets resources as well. So it's pretty simple. You just got to make sure that you do it because if you don't, you're going to get locked out in about 10 days. So just make sure you adhere to that. We'll be sending more, and I'm sure that I'll be bugging you if you haven't done it in a couple of days because they'll be sending me some reports on that. So just watch for that email and take action on that. I also wanted to remind you guys to check out the training calendar on the Resource Center. There are some Yext trainings, YEXT trainings that are coming up that I think everybody should participate in. Yext is a platform we're spending $1 million+ on, and it's a really great platform to allow us to have a robust online presence and allow that to be synchronized across multiple social media platforms and websites and things like that. We're obviously beginning to understand the power of it, but these trainings are going to be built, and the Yext people are actually going to be on these calls answering questions. So I would highly encourage if you have any desire to have an online presence to your agency and to your practice, you want to understand how to leverage Yext. It is a currency that Health Markets is paying for us to have access to, and I want to make sure that we're all leveraging it and using it really, really well. I think alongside that, I just want to reiterate that all of you should also be working to build your Google reviews. That's something that we have a concerted effort on inside of my own personal agency. You want to build those Google reviews. We have more and more clients that are finding us online because they're doing that local search, and we're coming up. I think we've got 56 5-star reviews right now, and so many of you have 100 plus, which is great. But I think even if you're, in the infancy of getting your practice started, you definitely want to build those up. McIntyre, do you know how many Google reviews you have now? Any idea? Sorry, I totally
About
cut you off.
160.
About 160.
Hmm.
So it's something. Do you feel like you're driving a lot of new business into the practice from it?
I mean, more and more people are finding us on Google. So yeah,
Good.
we had somebody call the other day saying that we were pushed up to number one, even though they were in like Columbia City or something. So
Sweet.
yeah, it's
Great.
working. It
Yeah.
works.
I think it works really well. So that's great. I also wanted to just quickly comment on health insurance under 65 live transfers. That continues to be a very robust way for all of you, but especially for new agents to build your practice. I got some numbers here that I'll just share with you. In the last month, we have generated about 21,000 under 65 live transfers nationwide. Our conversion rate is about 24%, which is really good. So you're about 1 in 4 that were closing in one way or another. The mix between those was about 8,000 branded, like Health Markets live transfers, and the other 13,000 were affiliate live transfers. If you're working this live transfer like game, I guess I would call it, I would absolutely recommend doing branded and affiliate. Justin, I know you're taking a lot of live transfers. Do you see significant differences in quality between branded and affiliate, or do you have any comments on that?
Yeah, I got comments. Yeah, I definitely see differences. The the branded calls, um, there's not as much quantity. Quality tends to be better. The third party, I get a lot more quantity of those, but the quality of those tend to be they tend to be more customer service, people looking for their cards, have questions, looking for providers, or they think they're calling Medicaid. So the branded calls tend to be a little bit better. Although this time of year, from January to April 15th, majority of the live transfers have been people looking for 1095s. So trying to do agent of record change, that process is something I'm still trying to figure out. It's pretty cumbersome.
Yeah. And I know it is to get that agent of record change and do the three-way call and all of that. So I would highly encourage, though, if you're a new agent and you're not jumping on Justin's live transfer training calls, he's doing two a week right now, 2 hours a pop. I think that's what it is, right, Justin?
3 hours on Tuesday evenings and 2 hours on Wednesday mornings.
Okay. And I've asked Sandra to, we've pushed it out. It's the same link every time. We don't change any of that. We're not changing the times or the links, but I've asked Sandra to start pushing that out for me regularly so that you all have it. But I would encourage you you can log on to the Zoom and you can just listen to what Justin's doing. And then between calls, he's willing to talk and have conversations and discuss things. I think you're doing some great work there, Justin, and I'm very, very appreciative of your willingness to help out, other new agents on the team. So I'd encourage you to jump on there. I will say that if you're some of the states that had a very high volume of leads this last month, but a low taken rate, Indiana was one of them. Believe it or not, we were at like 58% taken rate, which kind of surprised me. And that was, across the 24/7, 30 days, right, that they were looking at. Illinois also had a high volume and low taken rate. Virginia and Georgia were two others. And I don't know anything about Virginia or Georgia. I know Georgia's a state exchange. And Illinois is a state exchange now. So, but there is some great leads flowing, a good volume, and we don't get awesome dispositions on them. We've got about 15% of them that have been dispositioned. So, when I say it's a 24% conversion rate, that's based on 14% of them being dispositioned. So, it's not full data because not everybody dispositions perfectly. It tells us what's going on with the leads. But overall, nationwide, about 74% of those live transfers were actually taken. So about 26% that are not being taken and are falling to the ground. So I'm just trying to tell you, there's an opportunity on those live transfers. And if you are not slammed elsewhere in your practice, I would encourage you. You've got to, those live transfers are kind of the birch for the fire, especially in the beginning months and weeks and months of your practice to hopefully get you up and running. So make sure you're taking advantage of those. Last thing I wanted to just announce is that we do have our loyalty rewards program. Uh, Many of you on the call may not have fully understood this yet or may not have been introduced to it. This is an annual program that we run. It's an annual bonus program for tier three and tier four agents. It's scheduled to pay out later this week. Every year, the company takes $1.8 million and sets it aside into an escrow account. And then based on our sales projections for the year, and we put a sales goal out there. And if we hit 100% of our sales goal for the year, Health Markets takes that full 1.8 million and divides it out and pays it out to the tier three and tier four agents in the organization. And it's based on the percentage of business that you wrote over the last 12 months. And every year there's a new pool that comes in. And so when this year's pool is paid out, it's paid out in four equal increments over the next 4 years. So if I had a $10,000 bonus this year, I'd get 2,500, 2,500, 2,500, 2,500. And then next year, I have a new pool of opportunity. Another 1.8 million that's out there that's divided up. So once you get 4 years into the deal being tier three or tier four, you have four bonus pools that are paying out every single year. So I know many of you are just struggling maybe to get to 10,000 or maybe 50,000 to get to tier two status. Once you hit those marks, though, that next big goal should be getting to tier three. And I think all of you should have a plan on how am I going to get to tier three over time, because that at tier three, you're getting much higher commissions on every product that you sell, but you're also getting access to things like this loyalty rewards program, which is a pretty significant bonus. So just wanted to make you aware of that. All the details are on the resource center under the contest section. So you're welcome to go read that and brush up on what that actually is. So we're going to pivot into talking more about life insurance and maybe a little bit more advanced life insurance. But I did want to open it up a little bit for kind of some Q&A. And just wondered, do you guys have any questions for Steve or myself, Cavajola or myself, on the content that Steve went over last week? I know that he really focused on, our term life insurance products, the term life insurance with living benefits, and how to do a needs analysis and begin to ask some of the questions and better understand what the need is. Are there any questions about those products or the processes or anything like that that we can answer before we move into maybe a little bit more complex type of life insurance conversation? I'll take your silence to mean that Steve crushed it last week and there were no questions, which is great. So, so I just wanted to share a few thoughts and philosophies that I have about life insurance. I do think it is an enormous opportunity that we're only scratching the surface on. One of the things to remember about life insurance is that it is the highest commission product that we have in our portfolio. Some of the products actually, Sandra, did you have your hand raised? I'll pause for Sandra.
Hey, I think this ADT link did not go out to the Michigan agents.
Huh, really? Well, the good news is we're recording it.
Yes, so I'm forwarding it as I can.
Okay, let me if you give me just a moment here, I'm actually going to send it out. You're just getting notice of that. It sounds like. Okay. Bear with me, bear with me, bear with me. So if it didn't go out to our,
It didn't go out to the Michigan folks. I see everybody here is Indiana.
okay. I see some people coming in through the waiting room. So give me just a moment here.
Sorry about that, guys. Sorry,
Yeah.
Cav.
I actually thought that I'd sent it to everyone. I don't have time to go check that, but I'm just going to resend it to everybody.
See what happens when Silas goes on vacation and comes back?
Yeah. All right. I did just send that out. The
Thank
good
you.
news is all they missed
Yeah.
was the announcements.
Now we'll get to the meat and potatoes.
Yeah, there we go. I see Ashley and Cole and Madeline and some others coming in. So, okay, Sandra, thank you for that. And I'm sorry. I'm sorry for those of you who are coming in a little bit late. That may have been my bad. I haven't confirmed that it was yet, but it might have been if you didn't get the link. So my apologies. So, a few thoughts that I have about life insurance. As I mentioned, it is our highest commission or product in our portfolio, number one. Number two, it's double weighted from an FYCR perspective. So, life insurance is a way to hit your milestones very, very quickly. Um, I think that probably the most simple way of selling life insurance today for us is leveraging Ethos. Ethos is just such a streamlined platform. And I'll tell you, there's so much advertising going on out there right now. I'm seeing it on television. I'm hearing it on Sirius XM radio. I'm seeing it on streaming. Like Ethos is advertising at a pretty high level and becoming a bit of a household name. So I do think there's a lot of cool things that we can do to leverage our partnership with Ethos. On your Ethos website, every single one of you has a link that you can send out to clients and they can shop and enroll inside of 10 minutes with no paramedical, no peeing in a cup, no needle sticks, any of that kind of stuff, and get approved for, I think it's up to $2 million. So that's a really, really great way to get started. I would encourage you to get your Ethos link on your social media platforms, get it on your email signature, push it out there to clients, however you need to do it. That's a wonderful way to kind of get started. Um, I'm a big believer, as Steve talked about last week, that a big part of understanding somebody's life insurance need is understanding their number. Like, what is the number they need? I think he talked through, DIME, DIME, kind of tattling up, what amount of debt, how much income do you want to replace? Do you have a mortgage that needs paid off? And then the E in DIME is, in my opinion, I use it as end of life or education if someone has young children that they want to help pay for their education. So you can kind of use that to begin to develop a bit of a number. I have taken a lot of time with clients, to ask them, has anyone ever done a life insurance needs analysis for you? And most people say no. And I say, well, I have a very simple process that I work through. We call it the dime technique, and it just helps them identify what their number is. I think it's more important to get them the number that they need than it is to sell them a specific kind of life insurance, right? So oftentimes that will start off with a term life insurance sale. Um, One of the seeds that I try to plant with my clients, though, is that once we get you approved for your term life insurance, we go through the process and we get you approved. We might want to then talk about a more permanent type of life insurance, whether it's, index universal life, IUL products, a whole life product, something that will stick with you forever and be locked in for the rest of your life. I think that's something you guys need to get good at explaining too, is the difference between term and permanent life insurance. Those are kind of the two buckets that almost all life insurance actually falls into. Term is scheduled to go for a certain term. It's cheaper, it does not have a cash value, and it has an end date on it, or a date where that term is going to end. And every year after that, that premium is going to go up pretty significantly. I think term insurance is a great solution in many, many situations. I own an enormous amount of term life insurance myself. I also think, though, that permanent life insurance has a purpose. Permanent life insurance is locked in for the rest of your life. It oftentimes does build a cash value inside of it that you can borrow against or use later in life in a variety of ways. And on these permanent life insurance products, there's also the ability to build out what are called hybrids. So that would be a combination of life insurance and long-term care insurance smashed together. So I definitely think there's a need for the permanent life insurance. If you're dealing with elderly people or people who are maybe 60 years and older, one product that we have in our permanent portfolio is something called Final Expense. I don't want to spend a ton of time on it because it's probably the simplest product that we sell, but a Final Expense product is designed to just clean up the mess. And many times when we're talking to folks around age 65 about their health insurance or Medicare insurance needs, that final expense or permanent life insurance product might be something good to bring into the equation. I will caution you that it is not legal for you to talk about or quote or really go through a life insurance product at the same time you're talking about Medicare. There has to be a 48-hour window between your Medicare presentation and talking about and quoting permanent life insurance or final expense life insurance. So that's worth noting. Um, in our product portfolio, we have a variety of different final expense products. Aetna has a product, Mutual of Omaha has a product. I think probably the premier product in our portfolio, though, is the Transamerica final expense product. And there's several different versions of that, several different ways you can sell that. When we look at final expense life insurance, though, that's typically a product where somebody's buying, 8, 10, 12, 15, $20,000 of coverage, and they're locking it in for the rest of their life at that amount and that rate. It does not build cash value, but it also doesn't end as long as the premiums have been paid, which is very nice. And a lot of times, people, you think about these policies, this is a burial expense or something that is just going to clean up the mess a little bit at the end. Another way that those final expense products can actually be used is to replace Social Security income when there's a retired couple living together. I think if you're talking about people who are in retirement, especially if they're on a fixed income, it's worth talking about the reality that if the husband or the wife passes away, one of the two Social Security checks that they're getting are going to go away. Usually it's the lesser of the two, but that could put a significant financial strain on the remaining survivor after that first member of the family actually passes away. And so a final expense policy might be used to replace some of that Social Security income that would actually go away. So I would encourage you to, think about that, talk about that, especially if you're working in the Medicare space, understand that final expense life insurance. The one nice thing about our final expense products is that most of them are available in Quote Connect for quoting. So you can plug in there and plug in some information and start running some quotes. You can always go to the Transact website, which is Transamerica, or the other carrier portals to also quote those particular products. Cav, before I move on, do you have any more thoughts about the final expense or specifically the Transamerica final expense products?
Yeah, first of all, the final expense, it's called the Express. You cannot quote that on Quote Connect.
With Transamerica, that's the Transamerica product.
Yeah, that's trans. Yeah, but there is one that shows up on Quote Connect. It's just a different product. But what they have done with this plan is they have made it's probably the easiest underwriting. Now, again, not everybody's going to get it, but what most insurance companies do is if you have two or three different conditions, it'll just knock you out or get you a graded plan. Transamerica's on this is they look at each condition individually. So you could have three or four different conditions, but but they're all being treated the way Transamerica likes it, you could a lot of times get a select rating, not a graded rating. The other thing is it's instant approval. In I think it's like 98% of all applications, if they get accepted, you'll have a policy number when you're done. Um, and again, it takes about 7 to 10 minutes to do the whole application. Okay. So that is the one thing that I would talk about for the Transamerica. But again, Mutual of Omaha has a nice one, Aetna has a nice one, but those are a little bit stricter underwriting where more people will get the graded benefits or they just won't get it at all. So I would really learn the Transamerica.
Do you want
The
to explain what graded benefits are? I don't know if everybody on the call knows that.
Yeah, graded benefits are if you have health issues for illnesses, you'll have a reduced benefit for the first 2 or 3 years. So if it's an accident, you get 100% coverage right away, where if it's a graded benefit, they might cover, 20% of the death benefit the first year, 40% the second year, and then you get the full benefit by the third year. But again, for someone who has health issues, Hey, I got good news and bad news. Good news is you got approved. The bad news is you're not going to get don't have a heart attack in the next 2 years because your family's only going to get X. But the other nice thing about it is Ethos has a guaranteed issue plan. So if you take someone through a mutual or a Transamerica and they get declined, now you can transfer right over to Ethos and it's a guarantee. Now it is a graded benefit for the first couple years, but these are people that, you got turned down. So this is your only option. And so it's like I only go to Ethos if I can't get people in the other plans because even the Ethos, just if they get a good rating, it's still more expensive than some of these other ones because Ethos is only looking at data, but Transamerica and some of these other companies will do some other things. So you usually find it with the term and the permanent. If they're healthy, you can probably get a better deal on some of these other ones. Um, but the best way to sell a guaranteed issue life insurance plan is get turned down by another company. Then they become a very excited buyer at that point. So
Agreed. And I do get that question a lot. I got a sick person. What carriers give us a guaranteed issue life insurance product? The only one I'm aware of is Ethos. So if you've got a sick person, to Cav's point, if you want to try something else and see if they get declined, but coming back to Ethos then and submitting through Ethos is probably going to be your best bet because Ethos does guarantee that they will give them an offer of some sort.
can I touch on that too? Because I think I had this question last week, but a lot of people are like, well, if I apply for life insurance, whether it's term, permanent, and I get turned down, is that going to ding me if I go to another carrier? No. Yes, some of the carriers will ask, have you been turned down? And if you say yes, that just tells the carrier we're gonna look a little harder at you. It's not one of these things where, okay, if you've been turned down, you don't get it. Like the United Healthcare Term Life Safeguard. If you've been turned down by life insurance, they're like, we're not going to write you. Okay. But some of these other companies will. And I've had companies that got people that got turned down by other companies and they got standard from a different company. I mean, it's just so I'm always the one is I don't try and figure out when it comes to life insurance. I say let's just submit the app. Let the insurance company tell them they're uninsurable. I'm not going to figure it out. I'll try, and if that doesn't work, then we'll try this one. Because eventually, if you get turned down by two or three people, your only option is a guaranteed issue. And like I said, once they find out they can't get life insurance anywhere else, that guaranteed issue life insurance looks very, very attractive,
Right.
even though the premium's a lot higher.
Right. And
So
that is something to understand. The simpler it is to get the policy, the more expensive it's going to be per thousand of coverage, right? So a simplified issue where they're doing no medical underwriting or anything, that's going to be quick and easy, but they're going to pay a little bit of a higher premium for that. If they're willing to go through a full paramedical exam, whether the carrier requires it or not, they're going to get their best rate offering to go through the paramedical exam and doing full medical underwriting. And sometimes those rates are different. I will say though, you've got to kind of think about it because someone going through full medical underwriting that has some medical issues, sometimes that can be a long, arduous process of pulling medical records from doctors' offices, them, having a full paramedical exam at their house. I mean, what good is the life insurance if it doesn't get approved or issued either, right? And it just takes too long. So I think you got to understand your client a little bit. And do they want quick and easy, and are they willing to pay a little bit more for that? Or are they really somebody that's really healthy and could benefit from going through full medical underwriting? Conceptually, I'm a believer that most people should have some level of term life insurance and then some level of permanent life insurance. I'll tell you what I've done personally for myself. I have a very large amount of term. I bought it in my 30s and my 40s, and I built it and I bought it in a way that it was designed to run through my early to mid 60s. So once I turned 60, my permanent life insurance policies begin to fall away. But I also had purchased some permanent life insurance alongside that. So I have several $1 million of term that is designed to replace my income during my main wage earning years, which is probably right now. It's also designed to make sure that if I don't come home tomorrow, my family's well taken care of and they've got the financial backing that they need. But I've also got this permanent or series of permanent policies that I built, and I've got about 250,000 total in permanent life insurance. And kind of my thought is in my early to mid 60s, as those term policies hit their term and begin to fall away, hopefully at that point in life, I'm in a really good financial position. I don't have a lot of debt. I'm not in the red. I'm in the black. I've got assets and resources. I don't need a monster amount of life insurance, but I do have this $250,000 of permanent that goes forever. And the beauty of that $250,000 of permanent life insurance is that it does have a cash value building inside of it that I could borrow against at a later date. If I pass away in my late 60s or early 70s, it gives my wife a $250,000 lump sum tax-free cash infusion so that she doesn't have to liquidate other assets at fire sale rates. It gives her some breathing room and some cushion before she actually, has to start dipping into other things. I will say that's something that is worth understanding about life insurance. Most life insurance payouts or death benefits are paid out to the beneficiary on a tax-free basis. Sometimes people forget about that, but being able to provide your beneficiaries with tax-free death benefit is really significant. And there's a lot of much deeper life insurance, planning that we could kind of go through. We don't have time today for it, but there's a lot of estate planning attorneys and things that use permanent life insurance as a way to levelize and equalize things. I'll give you a quick example. I had a farm family that I worked with a number of years ago, three children. Two of the kids were involved in the farm. The one was off doing her own thing, wanted nothing to do with the farm. Well, the two sons who were sticking around home and building houses on the homestead and going to farm this land forever, their inheritance was going to be the land and the farm. But the third child wanted nothing to do with that. So what the parents did is they built out a life insurance product for the one child who wasn't going to be involved in the farm to level out the inheritance. So the farm was going to the two sons, and then the daughter who wanted nothing to do with the farm, her inheritance was actually going to be delivered to her through a life insurance product so that it came to her completely tax free. And they felt they could kind of like levelize how they distributed, their assets and how that net worth actually flowed down from them to their children. So as you start digging deeper and deeper into life insurance, there's so many cool things that you can do with permanent life insurance. I think Kevin Tran has tapped into this more than probably just about anybody else on the call. He's doing some really cool things. I don't know, Kevin, did you have a chance to talk last week at all? Did Cav call on you?
Yeah, Cab promised me 30 minutes, but he gave me five. But I got
Oh, he learned from me. That's how it works, right? I know
Yeah, I
talked
Kevin.
wanted
about
him to
things
know
that
how I feel.
Yeah, sorry about that. But yeah, if you guys were on last week, and we'll get the recording out there so you can kind of watch whatever Kevin's commentary was from last week. But Kevin's doing some really cool things with permanent life insurance policies for children and building it so that you can build a permanent life insurance policy at a very low rate and guarantee that a kid's going to be a millionaire by a certain age, or guarantee that they have a cash value that they can borrow against independent of their credit history later in life. Some really cool stuff you can do around that. So I think it's worth, part of this is like being a student of your business and diving into that. Um, I will say quickly, for those of you who came in from Michigan or Derek Mabry's team, I'm sorry if that link didn't get out to you this morning. I resent it once I realized what might have happened, but thank you for joining us. You didn't miss a whole lot. We had some announcements early on. You guys can circle back and watch the recording on that. But I do think there is worth jumping into the different carrier life insurance trainings that are going on. If you watch the training calendar or you're connected with Securian or Transamerica, those companies and carriers are doing a lot of life insurance training, and they have reps that will help you as well. One of the things I would encourage you to do a little bit is lean on our carrier reps when you have a complex, complicated, or situation that you don't fully understand what to do with it. I think asking a lot of questions, understanding what the client's trying to accomplish, what they need, what they want, doing a simple needs analysis to get their number, and then taking that information and taking it to, our carrier partners at Trans or a Securian and saying, okay, I got a guy or a gal, and here's their situation. What product mix could potentially look at, and what would make sense? So I think I want to make sure that you guys know that you can really lean on those carrier partners very heavily as well. So, with the last 20 minutes, I want to talk through a couple of things and just show you a couple of cases I've been working on and talk a little bit more about a specific type of permanent life insurance that we have in our portfolio called a hybrid product. One of the big things that clients have tremendous exposure on later in life is something called long-term care. And I have had a lot of conversations with clients, especially around the time that they're turning 65. It probably should be a little bit earlier than that. I think most people say between 55 and 65 is when people should be thinking about long-term care insurance. I think it's important for us to let our clients know that Medicare was not priced or designed to cover long-term care expenses or needs. And when we think about long-term care insurance or long-term care needs, we're talking about three buckets. We're talking about nursing home costs, assisted living, or in-home health care. Those are kind of the three buckets that most long-term care solutions try to address in one fashion or another. Now, the way that Medicare works is that Medicare will cover up to 100 days in a skilled nursing facility following a 3+ day hospitalization. So there is a little bit of coverage under Medicare if the cards fall correctly or the dominoes fall correctly. The classic example is mom breaks her hip, goes into the hospital. She's in there for 3 days, gets a hip replacement done, but she can't go home yet. And so she gets transferred to a skilled nursing facility. That skilled nursing facility is then paid by Medicare or her Medicare Advantage plan for up to 100 days because she was coming out of a 3+ day hospitalization. Now, I will tell you that is not cut and dried either. Once someone gets transferred into a skilled nursing facility, uh, they have to be making progress, documented progress in that skilled nursing facility for Medicare or their Medicare Advantage plan to continue to pay that cost. So it's not just a free 100 days. If mom's in that nursing home and she's not getting up and she's not exercising and she's not doing what she's supposed to and she's just deteriorating within a couple of days, whoever the insurance company is, whether it's original Medicare or a Medicare Advantage plan, most likely is going to cut off that payment and they're going to say, she's not getting better. This is no longer our deal. Our deal is skilled nursing as recovery, not skilled nursing because you're laying in a bed. I have dealt with a number of situations over the years where that happens, and it's terrible because the rest of the family is now scrambling. They're coming to you as the insurance agent saying, the insurance company's kicking mom out of the nursing home. Well, that's not technically what's happening, but kind of. And the problem is most situations, these families have never planned for what is going to happen next with mom. So now these families are scrambling. I've been in the middle of a situation like this personally with my wife's grandmother. She went into skilled nursing and she ended up passing away before the 100 days, but she was legitimately in there. And we were getting down to the end of that 100 days, and the family was scrambling and saying, what are we going to do? Like, we've either got to figure out how to come up with 6 or 7 grand a month to keep her in there, or we've got to take her home and take care of her, or she's got to move into somebody's house and take care of her. Like all of these things were spinning, and this does throw an entire extended family into turmoil oftentimes. So I think as advisors, as agents, part of our fiduciary responsibility, especially with our clients who are 55 years and older, is to begin to have these conversations around what is your long-term care solution? What are you going to do? How are you going to go about covering that? Kind of my thought is that, if you have less than $250,000 in assets or net worth, it's probably not worth trying to buy long-term care insurance in any form, because you're paying money to an insurance company to protect a pretty small nest egg. Um, if someone does not have long-term care insurance and they have limited resources, what will happen is they will spend down their assets and their resources down to about $2,500 in total resources. And then that person can go into the state low-income Medicaid program. And the state that they live in then typically picks up the cost of the nursing home, the assisted living, the in-home health care. So that's a very generic way of how it works, but that's kind of how it works in most situations. So if somebody comes to me and says, I need long-term care insurance, but I've only got 20 grand in my savings and no other assets, I'd be like, I don't think you should start spending money each month to try to protect that 20 grand. I think same thing at 100 or 150 grand. It's hard to justify paying money to an insurance company to try to protect that money later in life. The reality of it is that many people later in life will end up in Medicaid. The state low income Medicaid programs will pick up their care and the cost of that care. It's a looming problem, though, for America in general. With 10,000 people a day turning 65, and that number doubling over the next 6 years and then plateauing for a decade, there is going to be a problem when all of these people hit that age where they need long-term care. And so I think the clients who are between 250,000 and maybe 3 to 3.5 million who don't want to burn up all their money at the end of their life, those are the people who should be thinking about long-term care insurance, hybrid type products. I tell people if you've got over 3.5 to 4 million in net worth, you can probably pay for long-term care insurance and still have plenty left over to do whatever else you want with. You can kind of self-insure it. So that's kind of how I lead into the conversation around some of these more complex hybrid type products. Um, I'm going to talk, well, let me show you what I did here. So this was a client that I built out some quotes for a week or so ago. And this is a gentleman, it ended up being a lot that he was interested in talking about. And so hopefully you guys, can you see my screen now? Cav, can you see that? You just give me a nod. Okay, cool. I couldn't see anybody nodding. So this was just some things that I put together for this particular client.
Can you make it a little bigger?
I cannot. If I make it bigger, it goes off the screen. Sorry. You'll have to zoom in on your end. So the first, and as I talked to this client, did my needs analysis, I identified a number of things ways that we might be able to help him and his wife. He's still working, but he did the number one here. I said, I know that you wanted a term life solution to offset your $215,000 mortgage, which you hope to pay off in the next 8 years. So he told me that right up front. He's like, I just want to make sure that if I die in the next 8 years before I pay this thing off. So I did a quote for a Transamerica 10-year term policy with a $215,000 death benefit, just to give him some data points. This guy's in his late 50s or early 60s. I can't remember exactly his age, but he's not in his 20s or 30s. So that particular plan was $57.45 a month. Pretty simple solution. I said this would be the lowest cost option, but it would require full underwriting to include a paramedical exam. Possibly. They may not need that, but I'm setting the stage that they do. There are other $215,000 policies available without full underwriting, which are easier to get for around $100 a month. So I kind of was looking at, the ethos and some of the other products and what that looked like, and those are going to push up over $100 a month. That was kind of the first thing that we addressed. The second thing is that he expressed a need for a permanent final expense policy that would cover him until he dies. This is what we talked about a moment ago. And so I ran some numbers with Transamerica. This does not have a cash value. It's just locking in a 10, a 15. I'm sorry, this should have been 20,000. So that was an error on my end. But 10, 15, or $20,000 of final expense locked in for the rest of his life. It'd be 52.75 or $100 a month for that particular product. Now I can see a solution with this guy where he buys both of these. This takes care of his mortgage. This takes care of one need for the next 10 years. He could cancel it at any time, so he could cancel it after his mortgage is paid off if he wanted to, if he didn't feel like he needed it any longer. And then we have this final expense piece, which is going to, go on for the rest of his life. Relatively inexpensive to give his wife or his beneficiaries just a bucket of cash at the end of his life to kind of clean up the mess. I think you guys probably understand this, but it is expensive to die, even if you're poor. So most people, it's 8 to 15 grand just to put somebody in the ground or cremate them and have a funeral and do it pretty simply. So it is expensive to pass away. The third thing that we had discussed is the possibility of setting up a hybrid long-term care permanent life insurance product for him and his wife. Now, he had expressed an interest in this because they have a special needs child. And so he wanted to have something in place for both of them that paid out a death benefit to be able to help that special needs child. But he was also concerned about that long-term care piece. And so I put together some highlights of these hybrid products. First of all, these hybrid products are built on a life insurance chassis, so we can lock in your rates for the rest of your life based on your current age and health. Second point is it provides a tax-free death benefit to your heirs when you die. Third point is if you have a need for long-term care, so nursing home, assisted living, in-home health care, or custodial care, you can begin accessing up to 4% of the death benefit per month to help offset these expenses. A $100,000 policy would give you access to $4,000 a month. A $200,000 policy would give you access to $8,000 a month. What I'm describing here is the Securian Life Protector Plan IUL product. And this is a product that we can build out to basically give a guaranteed death benefit to the end of their life and give them the ability to tap into that death benefit before they die and pull out up to 4% per month to pay for expenses related to long-term care insurance. Now, some people will tell me $4,000, that's not enough to cover a long-term care expense. I'd be like, you're right. Around here, it's $7,000 to $9,000 a month to be in a nursing home. So you're correct. But if you have to come up with $7,000 or $8,000, and this policy came in and gave you $4,000 a month, and you only had to come up with $4,000 out of your own resources, would it slow down the bleed on your own resources before you ran out of money? And the answer is yes. So one of the things I try to instill in my clients is that something is better than nothing. Just because it's not going to cover 100% of what your risk is, doesn't mean you shouldn't have something in place to offset some of the risk. In general, the act of buying insurance is shifting some of the risk from you to someone else. Very few people can afford to shift 100% of the risk and pay the premiums associated with that. So we're always shifting a percentage of the risk, and we always have a portion of the risk on our own plate. And so that's one thing I use to kind of address people who say $4,000 a month is not enough to cover the expense. Another nice feature of this product is that the money is paid directly to you, so you can use it as you see fit. So if the policy triggers and you start pulling $4,000 a month or $8,000 a month, that money is paid to you. And so you can pay it to anyone you want. If you want to have a child or a friend or the little neighbor later come in and help you out with things, you can use it for that purpose. So that is a nice feature of these hybrid products. My fifth point here is you never lose on this policy as long as the premiums are paid. You're either going to burn up the benefits on long-term care expenses before you die, or you'll be leaving a tax-free death benefit to your heirs. And then my last point is you can fund this policy in a lot of different ways, from a monthly premium to a single one-time dump in of cash. There's a lot of flexibility on how and when these premiums are actually paid. I typically quote it on an annual basis, scheduled to be paid for the rest of their life. That's kind of how I start. You can break it down to monthly if you want. You can also build these products in a way where they do a one-time dump in, or they pay on it for 10 years or 20 years and it's all paid up. We can use the illustration software to build out a variety of scenarios. I had a husband and wife couple that I sold one of these hybrid products to a couple of years ago, and it was a farm family, husband and wife. They were wanting to pass the farm to their kids, and their biggest concern was that they ended up in a long-term care or nursing home, and that they were forced to liquidate the land to pay for that. And so they wanted to protect against that. So they also had some cash, some idle cash sitting in savings. And so what they actually chose to do is each one of them did a one-time lump sum dump in of about $100,000. Now there were different ages and slightly different ages and slightly different health, but what that did for them then, one-time premium payment of 100,000 apiece, that created a $200,000 policy for each of them that was now locked in for the rest of their life, guaranteed with no premium payments needed. So they took $100,000 each and turned it into $200,000 each, guaranteed. And that money is guaranteed to either pay out when they die, or they can tap into it before they die to pay for long-term care expenses. So it's kind of this is a really cool product. I tell people these hybrid products, most insurance that we sell, I would put in the expense category as far as personal budget is concerned. And the reason for that is because it's something we're paying a premium for with no guarantee of ever using it. With these hybrid products, the way that I look at these hybrid products, it is just a leveraging of your assets and a reallocation of your assets to build something bigger. Because guaranteed you're going to get more out of it than what you paid into it, as long as the premiums get paid. So you can build this out a lot of different ways. For this particular couple, this just gives you some ideas. She was in her, I think, mid 50s and he was in his late 50s, if I remember correctly. But a $100,000 hybrid long-term care policy is $2,120 a year. So about $2,100 a year for him, and about $1,300 a year for her, because she was younger and she's female. And females on life insurance are typically less expensive than males because they live longer. I'll just leave that where it is. We won't talk about why they live longer, right? Yeah, we won't go there. And you can see that I quoted $150,000 and a $200,000 policy just to give them some different price points here. Obviously, hers are significantly less, but once they bought this, that would be locked in for the rest of their life, and they'd have access. Now, the way that I build these policies, again, is not to accumulate cash value. Usually I'm selling this type of product to somebody in their 50s or 60s, so they don't have this long, drawn-out window to build a lot of cash value inside of the policy. We're building it with two things: a guaranteed death benefit that will pay out when they die, whenever that might be, and the ability to tap into that death benefit prematurely before they die to pull money out to pay for long-term care expenses. Now, I will say most of these long-term care type products are actually the benefit that you get for long-term care. There's a trigger event that has to happen to get that benefit. Most typically on a long-term care or a hybrid type product, one of two things has to happen. Either the person cannot do two of the six activities of daily living. They call them ADLs. There's six things that they say are activities of daily living. So like, dressing yourself, bathing yourself, feeding yourself, wiping your butt, transferring from a bed to a chair, and there's one more that I can't remember. But as soon as you can't do two of the six ADLs, that then is a trigger event that you can start tapping into this particular policy and pulling that long-term care benefit out. Most of these policies do have a 90-day elimination period. So what that means is when you have that trigger event, you can't do two of the six activities of daily living. Then you have to wait or cover the expense associated with the care that you need for the first 90 days, and then the policy starts paying the $4,000 or the $8,000 a month. So that's one type of product and one way that it can actually work. The other trigger event for most of these long-term care policies is a cognitive impairment. So with cognitive impairments, we're specifically talking about dementia or Alzheimer's. Some sort of a cognitive impairment can also trigger that long-term care type of benefit. So these were the quotes that I had put together for this particular family. I did notate in the email that it's important to know that you have to be healthy to be able to get this kind of product. Way too many folks wait too long until they're sick to start thinking about it. I sent them an article here, and this article is kind of interesting because it says 70% is the percentage of people turning 65 who will need some type of long-term care services in their lifetime. That's a pretty crazy number when you really start thinking about it. So if somebody lives to age 65, there's a 70% chance they're going to need some sort of long-term care, and they're going to incur an expense around that. And so what I really encourage my clients to do is I encourage them to think about how they're going to fund these long-term care benefits while they're still healthy and they still have a choice to make. Cav, we're probably not going to get to your portion. We may do that after next week. We're going to come back to that. So, and I'll explain that in just a moment. But one of the things I am talking to all my clients who are between 55 and 70 about is I'm telling them and explaining to them that there's a 70% chance if you live to age 65, you're going to have a long-term care expense. And what I want to help you think through is what are you going to do? How are you going to handle that? I'm not pushing you to buy long-term care insurance or a hybrid product. What I am pushing you to do is think about it, have a conversation with your spouse about it, and have a plan in place while the choice is still yours. Because once you develop a serious health condition, you no longer can qualify for these products, and it doesn't matter how much money you want to spend. The answer is just no, you can't get it. And I've had far too many of those conversations. I will tell you, a motivated long-term care buyer is most likely not eligible to buy the long-term care, whether it's in a standalone traditional basis or it's in a hybrid type product like we've talked about here. So I think that's the conversation and where it starts. I don't think you have to be able to run these quotes and do these illustrations in the moment. I think, though, that you've got to be able to have the conversation and talk a little bit about it and understand their situation and maybe understand what kind of a budget they have. One of the things that I tell a lot of my clients is, you should start thinking about how much money you can allocate monthly or annually to protect yourself against this. One of the strategies, once a client begins to understand that I know what I'm talking about, I'll tell them, I think one of the best strategies is tell me what your budget is, and I can tell you what you can get for that. If you tell me I've got $200 a month that I can spend on this particular need, I can go out and run the numbers and say, well, here's how much, hybrid product or, Aetna Recovery Care, whatever the product might be that I'm going to use. Here's how much of that benefit or how much of that particular product you can actually get benefit wise based on the premium that you're willing and able to pay. So that's kind of backing into it at some level too. I do think all of us need to have more conversations though around life insurance and long-term care insurance. These are a natural progression to a core medical conversation, health insurance or Medicare, supplemental insurance, and then life insurance, long-term care insurance, and last but not least, disability insurance if they're still wage earning. That should be kind of the progression that you have. And I think you should build into your sales cycle. I don't think you can talk about all these things in one sitting. So this is where policy reviews become really important. This is where developing a relationship with your client becomes important. This is where having a strategy on, okay, we're going to circle back on some of these other things because you have these needs and you've asked me to be your advisor. And because you've asked me to be your advisor, I have a fiduciary responsibility to help you understand where your gaps and holes are and make recommendations around products that can fill those gaps and holes. I mean, our ultimate goal is to build a wall of protection around the clients that we serve. And I think those are the product lines that we can absolutely do this in. So, what I'm going to do, I know we're at the top of the hour and I talked probably too much today, but I hope this kind of gives you guys a glimpse of what this looks like. I would like to do a deeper dive in 2 weeks into these long-term care hybrid type products and walk you through some illustrations, walk you through quoting, walk you through what the enrollment process looks like. Just spend a full hour on that. I think that we could easily do that, right, Kev? So, um, so we'll plan on that. Next week, we're going to go through compensation reports, and that will be kind of the final module in our 12-week module that or 12 series of modules that we've been working our way through. We'll wrap up with that. But then the week after that, we're going to come back and we're going to do a deeper dive into these hybrid products. We're going to show you how to quote them. We're going to show you the nuances and the details of them. There's actually 2 products in our Securian Life portfolio. The one that I just showed you, and then there's another product called the Secure Care product, which is a little different and maybe a little different type of client that you would use that with. But I want to help you guys understand those products a little bit better as well. So, because we've run out of time, we're just not going to do it today. Before I close things up for today, are there any questions about anything that we've talked about that I can give you a quick answer to here? Kevin Tran, I'm curious, have you sold any hybrid products in your previous life?
We didn't have anything like that. We had basically a whole life with terminal care. I mean, terminal illness rider that acted like a long-term care rider. But like I said in the last week is that my focus isn't on the 50 and over crew. It's been on, people that are my age getting into retirement. Like you said, people that are wanting life insurance or wanting long-term care is most likely because they can't get it because they were just diagnosed with something. So it's our job to present that to them before that happens so that we can get them for the best price and get them locked in for their insurability.
Agreed, 100%. And I think that's well said. I mean, the reality of it is we're all one doctor's office visit away from being uninsurable when it comes to things like life insurance, supplemental insurance, long-term care insurance, disability insurance. A lot of those products, they're underwritten. And some of you who don't have a lot of experience with that, back when Cav and I started, we always talk about the old days, like everything was underwritten, right? If you were sick, you couldn't get health insurance. If you were sick, you couldn't get supplemental insurance. There was no guaranteed issue life insurance back then. We've now kind of gravitated towards a space where health insurance, at least ACA health insurance, is guaranteed acceptance. You can be riddled with cancer and 400 pounds and have had 10 heart attacks and you can still buy it at the same rate as everybody else. A lot of our supplemental products are guaranteed issue, which means they don't look at your medical history. Medicare is guaranteed issue, like if you do it in the right windows. So it's these other products where underwriting comes in, where you've got to have a little better understanding of risk. You've got to have a little better understanding of how insurance companies look at risk and what type of risk they're willing to take on. And I think that also should push us a little bit as agents and advisors to have these maybe tougher conversations with the clients that we serve because they have asked for our expert advice and guidance and input. And I think asking some of the questions, we go back to the original fact finder. That fact finder has a lot of great questions in it where you don't have to open that door in the moment, but asking questions and getting answers so that a week or a month down the road, you can come back and I can say, Karen, you told me you had no life insurance and that was a concern to you. Would you be open to sitting down and having a conversation about what that might look like and what we could do to like fill that gap for you, right? So a lot of that fact finding is setting the stage for future conversations that you want to have. And I think you've got to kind of think about it that way. You want to set the stage for what you're trying to accomplish. And ultimately our goal is to protect our clients as well as we possibly can. And that's not going to be just a health insurance or just a Medicare product the vast majority of the time. And that's the beauty of our product portfolio. That's the beauty of the health markets opportunity is that we have hundreds of carriers and hundreds of products that are at our fingertips to be able to solve these issues for these clients. We want to be problem solvers and troubleshooters and experts in what we do. So you being here today shows that you want to be an expert. It shows that you're being a student of your business, and I do appreciate that. Gab, is there anything else to wrap things up?
I would just state that, the way that you can look at this is, or the way that I look at it is for people that are under 55, my life insurance is about income protection, debt, all that kind of stuff, getting them their number. But when I start hitting people that are older than 56 and above, it's more shifting towards the long-term care product because, like I said, and you've said it several times too, Silas, the time to get it is when you're younger, but most people don't think about it till they're 65, and by then it's very expensive and too late. But, with some of the products that we have, we can show them that, hey, if you start paying for this now, we can cut it off and, by the time you're 70, or we can cut it off in 15 years, and then you've got it for the rest of your life. And just start planting that seed. Because I'll tell you, if you do that, and some of you have heard the story before, but I've got a buddy of mine who we talked about long-term care. He's like, okay, yeah, whatever. And then a year later, he called me and said, hey, I want to revisit that. And I'm like, why? What's going on? And it's like, well, my parents are having to deal with this now, and I just realized how expensive. And so he bought a $400 policy on himself, a $300 policy on his wife. So my advance on that was like 3,500 bucks. It was worth the year wait. But he probably never would have called me if I hadn't talked to him about it a year earlier and just say, hey, this is the time you want to start thinking about this.
I would 100% agree with you. Like, you got to plant the seeds. These big life insurance cases don't just drop in your lap. You've got to plant the seeds and get in the habit of planting the seeds every time with the clients that we serve and then revisiting them. Some of the biggest life insurance cases that I've ever sold, and I've sold some pretty big ones, maybe some of the biggest on the team over the years. Um, they came from 4, 5, 6 different conversations over an extended period of time before we actually consummated the deal, right? So it's not just planting that seed once, it's planting that seed and reminding them, talking about it. One of the biggest cases I ever had, they kept telling me, we have life insurance, we have life insurance. I ended up sitting down with them literally at their kitchen table. And I said, well, let's look at your life insurance policies. We pulled out all these big life insurance policies that they had, and they were all scheduled to terminate in the next 60 to 90 days. They didn't even know they were at the end of their terms. And so all of a sudden we're in a mad scramble trying to get them. And now they're way older and it's way more expensive. But we ended up putting a package of permanent term, I mean, final expense, all of it together for them. And it was the single biggest series of life insurance sales that I had across the couple. But it took several years to get to the point where I could actually pull that deal off. So planting the seeds are really, really important in this particular aspect of the business.
Well, and I think the other thing too is, by you taking care of them with their health and sups, and especially if they use some of the stuff and it actually works, that builds trust to where they'll start. Because I'm sorry, guys, a lot of people, health insurance agents, in most people's mind, they're a commodity. But when you start taking care of people, they'll start trusting you for more things. And that's why this whole thing is about, again, building a relationship where, like Saya said, some of his biggest deals were with clients that he had been with for 4 or 5 years. You're not going to get these things when you just met someone. You're not going to get these things on a live transfer. You want to build that relationship where every year, yeah, when you're helping them re-enroll, you can always go to your fact finder and say, hey, last year we talked about long-term care. It's just going to get more expensive. It's just going to get harder to get and that's just the conversations you have. And they're finally like, yeah, let's get together and do it. And I mentioned this last week, and I still believe it 100%. I believe life insurance, you can talk about life insurance on appointments, but I think it needs to be its own separate appointment. So again, when Silas mentioned about Medicare and final expense, you can talk about it, you just can't quote it on that. Same thing with under 65. You can talk about life insurance, you may gather some numbers, but then you come back and go through the illustrations and stuff to show people and just look at it as a 2 or 3 call close, but it's worth it because of the commissions.
Yep. It does take a little more work too, because there's a little bit of babysitting that happens with these applications. Ethos is pretty simple, but some of the other carrier applications, like, you got to touch it a couple of times. You got to check in on it. You got to make sure that the carrier has what they need to get things issued. You got to make sure the client signs their delivery receipts and stuff. There is a little extra work, but it is also the highest commission product we have. And so figuring out how to feather this into your practice, I think, is a really, really important part of continuing to build. So,
And one other thing I do want to add before we go
sure.
is when it comes to these bigger life things and hybrid plans, guys, you don't have to know everything.
Right.
There's people at the insurance companies. Well, if you just call them and tell them what the people want, or call Silas, call myself, call Sandra and say, hey, this is what I'm running into. We'll help you build the plan. We'll show you how to explain it. It's kind of like, hey, I got to run it by my people, find the right plan for you. So don't feel like, well, I can't really talk about this because I really don't understand how the hybrid plans work. Well, we'll show you how to quote it next week, but more importantly, you just got to learn how to call us because we know how to build it for you. Just, well, here's the information. We can go through the illustrations with you and say, okay, here's the pages you need to focus on. Here's what you need to say. And then you come across look like a seasoned pro and you're like, I have no idea what this even says. That's okay. Because we do.
Yeah, it is
We
that
don't.
easy.
There's people at the insurance companies that do.
I think that should be part of your presentation that, I've got a team of people that help me with, more complex life insurance cases. I want to gather a bunch of information that I'm going to go to work for you. I always think back, I try to use that same analogy when I talk about health markets and the team behind me, right? When in my protection for life positioning statement. And I always go back to that. Some of you may not be old enough to remember, but that Verizon commercial where it's one guy and then he's like got a whole team of people behind him. That's kind of how I think about this. You do have a whole team of people behind you. You don't have to be the subject matter expert in everything. You've got a team working for you and behind the scenes, whether it's with the carriers, whether it's with health markets, whether it's internally within our territory, within your sales team. You've got people you can go to on this stuff. So leverage that and use that. All right, friends. I hope you all have a great Tuesday. Thanks for your time and attention today. We're not doing it next week. 2 weeks. We're going to go into the illustrations. Next week's going to be compensation and reports. I would highly recommend, especially if you're a new agent, jump on because you want to understand how you get paid and how to track things. So thanks for being here. Everybody take care. Have a great week. Bye bye.